Everybody, welcome back to Crypto Talks. My name is Phil. This is Rob, and we're doing Macro Tuesday today again because it's Tuesday. Makes sense, right? And sorry we're late. Long day. Just got home. Barely had time to prepare things. Ugh. Yes. So we're actually looking at some pretty interesting stuff today.
We think so.
Well, yeah. Well, I mean, we're going to talk about the Bitcoin ETF from BlackRock. That hopefully is coming in January. Kind of see what we think the effect of that will be on the crypto market. And I just want to kind of dig into the whole supply crunch discussion in terms of how severe would that actually be, and maybe it's an oversold type argument, and because I know you have a view on that, Rob, which is why I wanted to bring that in. And we're gonna kind of see if we think Bitcoin might become some type of institutional standard with the ETF coming. Obviously, excuse me, obviously not instantly, but over time, will Bitcoin become one of those must-have things in a portfolio, or is it like a standard recommendation from various banks when people want to invest in, and so on and so forth, right? So that's kind of what I want to touch on today. So yeah. I do want to start though with everybody who watched this yesterday on TA Monday. We were talking, we started that with a view on Kevin Senson's a falling wedge extrapolation, and something that I kind of forgot to add to that was that there's, if you do I'll just show it. I don't even know why I'm just talking about it. Sorry, I just wanted to show this before we start because I think it's an interesting thing. So I want to pull from this weekly close to the bare bottom weekly close, the FIBA retracement here. And this is on the log scale. And we're ending up with the 786 sitting on top of where the top of our resistance range is. And I just found that interesting. I forgot to put that in there yesterday. Rob, you did talk about that at some point though. That we had the similar thing from
you've just got, it's another confluence of support. You've got a fib level using the log scale, and then you've got a fib level using the linear scale, and both of them line up very nicely to the potential peak of where this current move is going.
Yep.
And it's we have to say potential because nobody knows if it's going to just carry on blasting through, and that's the sort of thing we're going to touch on today. But you have to kind of just sort of temper expectations and accept that in terms of, for a range of reasons, we are not just going to suddenly go blasting off into a full-blown bull market. We could, there may be fundamental reasons why we do, which we'll touch on, but you have to see those developments to really believe it. There's a time to look at it and go, okay, now it's time to remortgage my house. It isn't it isn't here, it isn't now. When price action on Bitcoin looks like this, you can see those periods of times like 2017, like 2021, where this can just carry on for forever. We've never broken an all-time high before a halving. That would be certainly interesting, and there's I think it's very highly likely that there will be a lot of stubborn resistance if we did get up there. And so you're talking about, we're at 44k now. So how much room have we actually got back up to all-time high? You're talking about another 50% move.
Yep.
It's so what's the downside risk versus the upside risk? It's not uncommon, and in every previous bull market you've had 20% or to 40% pullbacks in bull markets. So just be patient. Buying opportunities will come. It's hard to sit on the sidelines while things are like this, but it's also, there was a point where you have to just look at it and go, okay, time to bite the bullet and get in. And that's what that's the what can cause supply shocks.
Yeah. So I just want to bring your attention to kind of this. Like, we're right here. We got the same type of thing going on here. Here's the fib level, and here's the fib level. We're not really there yet, but it's also the RSI here during this move, and we're kind of getting close to that now. We're actually on it, basically. And here's the the real bull market RSI in comparison. And you got this huge area of bull market RSI topping out. This is the weekly, by the way. But you see what I mean? It's like, yeah, we might get this, halfway into the bull market, like pre-bull pump thing. And it just makes sense to me. Not saying it's going to happen, but it just makes sense. We need some kind of cool down, where people can take a breath and then get in after the halving, maybe. I'd be happy to see that personally. But yes, so okay, so that's all I wanted to go over with this one. But now, you already mentioned the supply crunch, and the argument for the supply crunch, for people who don't know what that is, there is not a lot of Bitcoin on exchanges at the moment, and it's going down rapidly. And it has been. I don't think we've ever had this little Bitcoin on exchanges. I don't remember exactly the numbers, and I don't think that's super important either. But
I can give you the numbers.
Yes. So the argument is that when there is not a lot of Bitcoin on exchanges, that means that when big buyers come in and start to try to buy in, let's say an ETF opens, and there's not much to buy. So when people start putting money into the ETF,
number go up.
That's an argument. However, I like your argument, which is, if I remember correctly, it's very easy to move a Bitcoin into an exchange. So if there's a giga pump, whales can just go, oh, time to take some profits, move it in. Like, it's not hard to move it in.
No,
Yeah,
people talk a lot about liquid and illiquid supply, how much is on exchange, how much is stored in cold wallets. And yes, there is this very, very clear long-term trend of the amount of Bitcoin on exchanges going down, and that is an incredibly bullish move. But all it essentially means is that there is demand in the market at a certain price, and there are an insufficient number of willing participants at that price range. That's all it means. And if you exhaust the supply at a certain level, then the price needs to move up to another level in order to entice people who have their Bitcoin sat hoarded away like greedy little dragons to go, oh, actually, you know what? I'm going to release some of this Bitcoin and I'm going to make it available to sell. So it's higher prices that entice that. And you see this pattern in bull markets where the peak of the bull market happens when you start to see longer term holders unlock their Bitcoin, send them to exchanges and begin to distribute. And meanwhile, short term holders are the ones that are buying. The people that are late to the party, they're the ones starting to fill their wallets for the first time. Meanwhile, the guys who've been holding for 2 years, they're offloading into this buy pressure. And it's a cycle, and it's a cycle of exuberance that's played out multiple times over Bitcoin's history, and we shouldn't expect it to stop now.
Yep, no, I perfectly agree. Now, so this whole argument, I mean, it's still true that, when you're looking at long-term holders, and like medium-term holders as well, the kind of the trading kind of people, yes, you can move things over to an exchange pretty fast and get it dumped, right? And just take profits. However, I think most experienced traders who are, I've not seen any alerts for any huge Bitcoin chunks being moved into exchanges lately. There's whale watchers and stuff like that. It's not happened yet, right?
No, I mean, you see movements of say 10,000 Bitcoin, and you go, okay, well that's huge. It's like, but it's not, because those sort of inflows happen in and out all the time.
Yeah. But in meanwhile, we have one wallet that I've seen that's buying like 350 Bitcoin every day. It's like, okay, yeah, oh, sure, and that's one wallet, right? But again, like, I haven't really seen any of the big moves over. I've seen some alerts for USDC being moved into exchanges instead of Bitcoin, which means kind of buy pressure. But with all that said, I think when we have a lot of experienced people, they know that this is just a pre-run kind of, and so they don't want to sell yet. Selling now, what happens if they sell now and it carries on going, and halving happens, things go on and it keeps going up? They've kind of made they've taken profits, but it's not necessarily the trade that they want to make. These long-term holders are looking peak to peak, basically, or bear to peak. We have a strategy for that, by the way.
Just say that it's funny. I was just thinking, the person buying 350 Bitcoin a day. If anybody can get in touch with that guy, we've got some tools for him.
Yeah. Well, that's certainly a DCA. That's certainly a DCA strategy. Buy every day for how much is 350
Forever.
Bitcoin worth?
Lots.
350 times 44. I need to look that up. I'm not that good with math.
Let's see.
It's $15,400,000 every day. Imagine just like, telling your butler, hey, I think I want to put $15 million into Bitcoin every day. Let's do that.
And your butler's like,
can I get a raise?
Yeah, it's like, sir, I drive a Prius.
Gosh. Yeah. Well, okay. So, now that we have talked about the supply crunch and the possibilities there, do you think, I'm trying to figure out what type of effect we will see from the ETF actually being approved, because I think it's being priced in pretty heavily already, in terms of for the people who's already in the market.
Yes.
So the question is, will we get the same reaction as with gold, when gold got its first ETF in 2004, I think? It just went straight up for 8 years. Maybe that, or do we get, I think it was when Bitcoin's future ETF opened up and it just dumped right after.
Yep.
So there's like, we can't really tell.
So there are ways. Yeah, this is part of the maturation process of an asset class, and so yes, we've got a futures ETF. We will at some point, whether it's soon or whether it's 2 years from now, we will have a Bitcoin ETF one day, and these are complicated market instruments, and institutions will use these instruments to assess and to make bets on, based on risk. So what you can have is the potential for people to own Bitcoin on the spot ETF, but not actually want any of the Bitcoin exposure. They just want dollar exposure. So they would short the equivalent amount of Bitcoin on the futures market. And if they would then look and go, okay, my Bitcoin's locked up in this fund, because if they've seeded capital towards it, then they may essentially be owed some Bitcoin. And if you purchase Bitcoin of somebody else, Bitcoin from ETF, you may well be purchasing someone else's Bitcoin that they've basically borrowed into the system and they've sold.
Yeah. Your microphone's lagging out a little bit. Can you pull it closer just to see if it's just not reacting?
Is it the mic?
I think it was, yeah. It's one of those when it's catching background sounds and it kind of mutes itself. Maybe.
Yeah. Well, don't know. Well, hopefully you got
there.
most of that.
Not really. Can you go back 30 seconds?
Yeah. Okay. Oh, where was it? So what was I saying? Yeah, essentially. So these are so futures markets, spot ETFs. These are complex sort of financial instruments, and so what you find is that people, whoever's providing the Bitcoin for this ETF, it's not going to be BlackRock themselves. BlackRock don't have the money to seed the ETF as it would be necessary. So they are either going to be purchasing directly off the exchange. I think that would be a logistical nightmare, or people are going to put their seed capital in, where they basically say, okay, I've got 10,000 Bitcoin, you can use that, but you owe me 10,000 Bitcoin. And in that case, but potentially BlackRock just goes to the CME futures and they just slap open a big long, or they assess their risk, and the customer who looks at it goes, I've got this Bitcoin, I've got it locked in this ETF, prices are going sky high, I'm going to go to the CME futures and short it. And these so just because there is suddenly an ETF doesn't necessarily mean that we go to the moon, because if you look at the likes of gold, the futures market for gold is orders of magnitude bigger, maybe something as much as I've heard 200 times bigger than the actual spot market.
Yep.
And the way that the spot market for gold works is you will buy futures, spot futures that have an expiry date, and they would represent a redemption of gold. So you buy 1,000 tons of gold on this contract, and then when you come to take delivery of it, because it's a physical future, instead of taking future, you can go, oh no, don't worry, I'll just settle in cash. So I'll just receive the cash equivalent. And so actually, there's no gold that ever gets moved out of this warehouse. It just sits in the warehouse, and actually all of the contracts that are based on it are just settled in paper, in cash. And this is something that will happen to Bitcoin, and it is a method of price suppression, in that it allows people to trade Bitcoin without trading Bitcoin, and have allocation as an industrial level, an institutional level, using hundreds of millions of dollars. They can make bets on something that isn't even the real asset. So this is the market that we're entering into. And although, yes, on the whole, over a long-term basis, you would expect it to be perma bullish. It's a massive increase in demand. It's the demand access that we've been waiting for, but it's not all going to be up and to the right forever. There are going to be people who utilize this market in order to suppress the price of Bitcoin, and that can happen, and it will happen, and we're going to cry manipulation. But ultimately, if somebody has the wealth and the amount of asset needed to move the market, well, then you can call it manipulation or you can call it smart trading. But we are just minnows in the caught in the flow of this asset, and we can see the long-term path, and the long-term path is a lot more clear than the journey.
Yeah. Well, with that said, the whole question about the institutional standard for Bitcoin, are we going to see portfolio managers saying you should be allocating X amount to Bitcoin now? Or once the ETF is open, it's like it's almost legitimized to say that, to a degree,
yes.
I think.
And right. I think it certainly would be it's something a financial advisor would say, oh, if you want to take a risk that could lead to a big reward, put a couple of your % into here. But then as more and more people do that, and as more and more people go, you've done really well out of putting Bitcoin in your portfolio, haven't you? Yeah, I should take a look at that as well. And it is just a method of increased adoption, in that, particularly around pensions. If people who have a BlackRock pension or any pension have access to putting their capital into Bitcoin, then they will do that. The composite man will do that. All of the market together. Some participants will do it. Others couldn't give a toss. They will never put any money into Bitcoin. Others will put as much as they can in. I mean, I would be quite tempted, if there was no limit, to just be like, okay, yep, screw stocks. I'm going to put 100% of my pension into Bitcoin, if I had that option. Now, when you look at that as a statement of fact, and you look at how big the likes of the stock market is versus Bitcoin, and you go, yep, Bitcoin's too cheap. But that being said, at the same time, Bitcoin isn't as cheap as people necessarily think it is. It's on a par. It's in the range in terms of market cap of where silver is. It's maybe, I think, half or so of what silver's market cap is.
Actually, I have this. Give me just. I do have this. Give me one moment, because
Snap! Be ready!
Come on. I'm just trying to find it where it is in the, because I was just watching a video. Okay, so here we go. Gold is number one, obviously, it's $13.7 trillion. Number two is Apple at $3 trillion. Then it's Microsoft, So Bitcoin just flipped Berkshire Hathaway, which was at $775 billion. Meta Platforms, Facebook, and Instagram and all these things. was at 814, and Bitcoin is now at 816 billion. So it just flipped both of them in one day. I think two or 3 days ago. 2 days ago,
Yeah,
something like that.
okay.
So and silver is at 1.4. So we're more than halfway to silver's market cap, which is staggering.
So
obviously.
It is staggering, but then this is then the thing to consider is I look at, I talk about the likes of Facebook. People talk about buying stocks, and I say about Tesla, I'll say about Microsoft, about Apple, the giants in the market, the established giants, and you go, where is the money going to come from to drive these investments orders of magnitude higher? And that people go, oh yeah, but they're the market leaders, and it's like, yeah, okay, they are, and definitely sure have some allocation to it, because as we see, the world's falling apart and these things are at all-time high. They're pretty good at holding their value.
Yeah,
but
for sure.
Ultimately, when things turn to rat shit, these things can drop harshly too, and Bitcoin has never been an exception to that. But what we have to understand is Bitcoin is already up there with those giants, and anything we say, oh, where's the capital going to come from, we have to already say that. As much as we talk about institutional investment, there's been institutional access to this market for years. There are family offices that can have combined access to trillions of dollars, who can do what the hell they want with it. They have a slush fund full of however many billions, and they can just go and put it on an exchange. These are the likes of the people who will go to Tether and go, hi, can we have 1 billion Tether, please? And people will go, oh, there's the Tether market cap's all a fraud. And it's like, no, there are plenty of people out here who will just take hundreds of millions of dollars and say, I'm going to allocate to this market because it's 1% of my portfolio.
Yeah, it's I think the difference might. I've been thinking quite a bit about this, and I think that the difference now compared to before was that previously Bitcoin has always been kind of like, oh, it's those weird guys, institutions don't really want to talk about it because their customers just don't understand what it is, obviously.
Because the customers
most people
are all
still
old
don't.
people.
Exactly.
That's but then the customers are old people. They don't understand it.
But then with an ETF coming out in the States, there's already an ETF in Sweden. There's ETFs all over the place already for Bitcoin, spot ETFs. And they're being traded. But I think once it becomes, the world follows the United States most of the time with a lot of things. Fed rate raises the interest rates. ECB does the same 3 months later, and the train goes on. So could it be as simple as, when it's suddenly acceptable to invest in Bitcoin in the United States, the whole world is going to go, oh, and just start aping in?
So,
I mean, that's certainly a possibility. But
basically, the phrase that comes to mind is, nobody wants to be first, but nobody wants to be last. And you have the likes of El Salvador that are taking steps to be first and receiving a lot of flack for it. They've had threats from the International Monetary Fund to downgrade their credit rating, because from what they see, according to their models, which we can look at it objectively and go, okay, well, you've got a flawed model of how the world works, but okay. But they will look at it and go, you have taken on an awful lot of debt in order to bet on an asset which we consider to be too risky. Meanwhile, big brain people are looking at it and going, well, over a long-term strategy, this is basically no risk at all, and the guy's a genius. So
they are in profit now, by the way.
The truth is somewhere in between. That's the reality of it. Is the truth is somewhere in between, and you have to think, though, is that this sets off the game theory. You've got the likes of, say, Panama, who can look at El Salvador and go, this Bitcoin thing seems to be working out for them. I wonder if we could do similar. You got countries in Africa or in Asia, countries that don't have stable currencies, going, this seems to be a potentially good idea. We've got a lot of spare energy capacity here, and I keep hearing things about, we have miners that we can just plug in and use this spare capacity, and we get Bitcoin. So there's no downside risk, and the upside risk is number go up. I'll take that bet. And the more people see that actually the downside risk is zero if you can unlock that energy capacity, which the world is slowly working out how to do quite successfully. And that's one reason for the hash rate exploding. Is the last bull market, what it did ignite was an understanding and awareness that proof of work is not the environmental demon that people make it out to be. It's actually a way of converting excess pockets of energy into economic value. And that's something which the market has not priced into Bitcoin yet, but it's something that's being priced into Bitcoin, and this is something that will contribute to this raise in price. We had a year of downtrend that market rates have hit close to the top, as we would hope. They're not going to hike by another 5%. If they decide they're going to do another quarter or another half, then okay, we believe that would be a mistake, but it's a lot closer to the top than it is the bottom. And so all of that downward momentum has now been squeezed out of the market, and the market can now start to reprice itself fundamentally. And if the fundamental difference between now and say a year or two ago is increased awareness of the benefits environmentally, increased awareness of it as a monetary asset, and then also, more importantly, a deterioration in the sorts of fundamental value and trustworthiness of fiat currencies. And what's gone on in the bond market and what's gone on with the rates around the world and the pressure that's put onto currencies is something that a lot of people in crypto just don't really understand the market dynamics that are affecting this in the world right now. And crypto can offer not so much it's not superior to them, it's just an alternative system. It's just something that just can say, you know what, guys, opt out, I'm going to be here no matter what. And over time, people will go, you know what, this system's a bit crap, I'm going to choose this system instead. And person by person, day by day, that's the adoption curve, and that's how Bitcoin ultimately gets just squeezed off of the market, and we never see it again.
Yeah, well, only time will tell, pretty much. It's just the yeah, you're right. And by the way, you found your glasses. Nice.
Yeah, I'd never lost them. I just kept forgetting to put them on.
People keep asking me why I got these glasses on, and I'm like, you ain't seen nothing yet. Finally, now they see you with your orange tinted glasses. But
yes. Well,
so
it's a fun time. It's an interesting time. It's going to be funny how be interesting to see how the market reacts when things do fundamentally start to break. And I'm going to stand by this. I think you're quite with it too. Things are going to break, and as much as the aftermath of that will be incredibly bullish for Bitcoin, and coupled with this ETF news, this is the sort of thing that can start off the super cycle sort of narrative that we're talking about. But things have to crash and burn first. The less trustworthy the fiat currency system is, and the more problems it has, and there is an awful lot of problems with credits, with banks. That essentially there are multiple financial systems around the world that account for tens of trillions of dollars that are right now functionally insolvent, and they eventually will be unable to pay their debts and satisfy those debts. Right now, you can survive for a long time by stripping assets, by running a deficit. There are ways to survive when you can't pay your bills, but the longer those bills take a stranglehold on you, the more that it's likely to just pull you under, and companies won't survive, and countries won't survive. But, this is something that's going to severely impact economies at a national level. And we think that do we expect Facebook to crash? Do we expect Berkshire Hathaway to crash? Do we expect Tesla to crash in these scenarios? Do we expect these companies that we're now, Bitcoin is now a part of in terms of market cap, do we expect all those to go down? And yet we don't expect Bitcoin to do the same? So there is going to be one very, very obvious buying opportunity in the
I
future.
think so. Yeah,
that's the like.
You're really nailing it there, because it's like when we had this first pump, before we had this kind of I guess we had a couple of weeks of kind of up, but very
consolidation.
Yeah. And at the peak of that, that's where my head went, oh, it's over. What I didn't think about was that it was kind of in the middle of nowhere, sort of. Not for Bitcoin necessarily, but for Solana, for example. It kind of stopped kind of in the middle of, like, in between two ranges, which is kind of what happened with Bitcoin back in, well, first in April and then in July, where we had kind of this slow rollover top in the middle of a Fibonacci range that we had for a long time, and we were expecting it to go to the top, right? And so when I saw that, I was like, oh, okay, Solana is a much more insignificant coin compared to, Bitcoin, which leads the market most of the time. And therefore I went, oh, it's just stopping in the middle of a range, and I sold off stuff. And obviously it was a bad idea. But now
I would just like to, if you just pop onto my screen for a second.
Yeah, sure.
I would like to point out where I said, look at the Bitcoin chart. And there
exactly.
We have like
there we have it.
Just look, it was the middle of a range. Sure, it was versus
on the
dollars,
dollar.
not versus Bitcoin.
Yep.
So
precisely. So very important. This is why you must look at Bitcoin pairs. And I think I got a little bit overexcited because I got in very early on Solana, and so basically it was not a bad trade, essentially. So I can't really complain, to be honest.
Anyway, this is not TA Monday.
No, it's not.
There's just one thing I would just like to show.
Yes.
As well, while we're off there.
There we go.
This delightful beauty. So these are the hodl waves, which is I know what I can do. So basically, what these do is these show the amount of Bitcoin in terms of the circulating supply that has been held in wallets for different amounts of times. And so, on the basis of what going back to where we started the show, saying that Bitcoin can quite rapidly enter the market from wallets that have been stored for a long time, and what these show, this can be represented by these rapid peaks. So yes, you've got 100% down to 0% at the moment. So over time, we see this pattern that an increasing amount of supply is existing, in long-term holders. That this purple band are people who've held for over 10 years. So many of these Bitcoin can probably be considered to be lost. They're never going to move again because the keys are lost, and that's 15% of the supply has never moved in over 10 years. Another 5% hasn't moved in 7 years. So you've got a huge amount of this supply. You're talking around 50% of the supply that hasn't moved in over 2 years. These are people who are not scared of holding through a bear market.
Yeah.
And so you have to entice these people to sell. And how do you entice them? You have to give higher prices. And when you do get these higher prices, what you see is the amount that these bands take up decreases. So these bands of long-term holders expand during bear markets, and then they decrease during bull markets. And we can see at the top here in 2017 so this yellow band and the green band in the middle, they got smaller as the price got higher. So that's the long-term holders dumping their bags and giving them to this spike in short-term holders, the people that have held for 1 month to 3 months, or the people that have held 3 months to 6 months. They're the ones that go, okay, I've bought in June, but I'm going to keep buying into September, October, November, December, and they're going to buy at 3,000, but they're also going to buy at 8,000, 10,000, 15,000, 20,000, and then the price turns around, and they're the ones that are left holding the bag. And then the long-term holders then start to accumulate, and then they show up. Sort of, a year later, they start to show up as the people that started buying the dip.
Yep.
And so ultimately, if you're looking at where we're going and you're going, oh, is this the ultimate top? Is this the time to sell my Bitcoin because it's over and it's going to go back to zero? This chart does kind of show the future. This shows the hype cycles that lead to the exponential rallies, and we are nowhere near it yet. All of the signs are still pointing downwards, which is people are accumulating and they're holding, and we haven't started to really increase and have this increase in momentum like we did sort of especially visible in 2012, 2013. We have this real increase in short-term holders. Over time, it's harder for newer holders as the amount of Bitcoin supply has increased. So we don't expect to see the same size, but we would still want to see a big tick up in the amount of new holders, and we're not seeing that either yet. So for now, this is just whether it's a relief rally, whether it's the start of a long-term uptrend, nobody really knows. But as I say, we're quite confident at some point there's going to be an almighty big red candle, but that may only look like a blip in what becomes a 2, 3, 4 year uptrend. So it's obviously very difficult to say when to sell, but what is clear is that this is not sort of the ultimate peak. This isn't some blow off top. This is this is a pre-rally. This is a mid-cycle rally, and based on history, those mid-cycle rallies do have a habit of failing quite significantly, and that you have an opportunity to buy 30, 40, 50, even 60% lower further down the line, and so patience can reward you in this in that sort of sense.
That kind of brings me over to, I tend to look at the MBRV score, which I'll bring this up here right now. So over here is the score. The orange line is the score, and usually when you get to the green bottom here, this is bear market territory, right? We've been there, we're out of it, but we've barely moved into the higher points, right? Peak markets or let's say pre-market peaks are these type of stuff right here. So we're not even at this point yet, which is back in 2016. We're not even close to, we're halfway to where the peak was back in 2019, I think it is. Right here. So we have, I'm not saying it's going to go all the way up there, but obviously we're not near a peak, and it's not dangerously close to turning over yet, at least not according to the MBRV Z score.
All I would just say is look at how the similarity is to 2014, 2015, 2016. That's the pattern that we appear to be following, which is a far more natural looking adoption curve than the janky nonsense we had over the last few years. And so maybe, yes, potentially we end up in a new paradigm of big institutional investors just consistently, they're not going to go and put their entire balance sheet on in crypto overnight, but 10 million here, 50 million there every quarter. Let's reallocate and let's put a little bit more in. Oh, our Bitcoin portfolio's done incredibly well. It's now accidentally 40% of our portfolio. That's a bit too much, so we're going to take some profit off the table and we're going to sell this thing because we're up 7 times in a year. And it will get managed like an institutional asset where people will assess it based on its risk to reward profile, and they will have a risk adjusted allocation. And long term, that will only be bullish as more and more companies do it. You have to think, for every company that joins and starts to do this, is a company stopping to do it? No. This is an adoption curve. Every day there are only more people that are going to decide today is the day I buy some Bitcoin. And
I think it's very rare to see people getting out of Bitcoin. I don't really hear many stories about people like, I just stopped doing Bitcoin stuff.
That's why none of us are rich, Philip, because we're all paper millionaires, don't you know?
Right? No, so I do want to look at the rodal ratio, by the way, just because now I have it here. And this is very obvious, the trend that we're following, right? And one could argue we're somewhere around here.
based on the hodl waves that you
Yeah.
showed earlier, right?
Yeah. So we had a peak over here and then a peak over here, and that's funny because it's that's during a dip, this higher one, and right now we're gaining kind of momentum to get there. So you can see like even the exponential move here last cycle went pretty much parabolic right after a big dip like this. We could possibly see something like that happen as well, and then we get into that, and it just makes sense to me that we're getting into, it's pretty janky. We had one here, dip, and then up. Could have another dip, just like here, peak, bottom, up. It's
people trade. People trade, and people trade on
Exactly.
different time frames. People will have
Precisely.
bought during. Somebody could just trade if you go. Just go back to the MVRV score. People can trade using just that.
Oh yeah.
Forget everything else. Just pay attention to this.
Yeah, you have two options in my book if you want to find the bear market bottom. Number one, you can either use this maybe, or you can use a tool that's based on this, which is the tool that we've made.
There we go.
Which you will get to see later. So I didn't use the soon word this time. I said later. But yeah, no. This as well. It's we got ways to go. We're not at the halving yet.
This chart is super gay.
It's beautiful.
It's of course it is absolutely beautiful. But yeah,
I like it. It's clear as day.
What's going on. It is. I've never been. The problem with the regression outside of it is, okay, it's forward looking based off the past sort of volatility and movement, and do we expect the future volatility to be the same? I don't know, but it gives us hope. I mean, the hopium in it is a bit extreme at this point. Where's the top pointing at 400k?
I mean, now I'm just hovering. Like I tend to like to look like a third into the, or somewhere between a fourth and a third into, post halving, so somewhere around here. Then at least we can see the different ranges that we have, right? Sort of. And it's just nice to speculate and look at this and be like, even if it doesn't move that far up, like on a log scale, or linear scale or whatever. Log scale. It's still like, that's a lot, right? But yeah, we'll have to wait and see what happens with everything. But again, I think I still like the argument that we talked about in the beginning, the supply crunch thing. Yeah, it doesn't take much time for people to move money in, or to move Bitcoin onto exchanges.
The long-term trajectory is one of accumulation. It's one of people buying a Bitcoin and then removing them off exchanges. And so, yes, for that pattern to change, you need to entice those people to sell. And in order to do that, you need higher prices. And that's just how the market works. And this is why, people, every time Bitcoin crashes, people will look at it and go, okay, yep, that's it. It's done. It's finished with. And how people haven't looked at the last 12 months, 12 months, 18 months as a gift, I have no idea, because the long-term big picture, it should now be starting to become obvious to mainstream people.
Yeah. The thing is, look, I talk to a lot of people every day. Like when I'm out and about, I like to talk to people, right? I can talk to anyone. If I don't know them, I'll talk to them anyway. I don't care. And it is what I'm beginning to see is right now we're at the stage where, and obviously this is anecdotal evidence, but still, it's we have the people that are kind of into investing, even if it's just, investing in an index fund or something on, through their bank or whatever. They're looking at their savings and they're saying things like, it's doing pretty well. And then I ask them about, what they think about Bitcoin, and they have no clue. And they're all they know is that, it's a thing. And then I explain it to it and they are interested. People that don't really do any type of investing at all, they're not interested at all. They're like, I don't believe in it. Like, I have two distinct people that work together that I know that are one is just kind of into investing a little bit into index funds, and the other one doesn't do any of that. And I've told both of them the same thing. One is super interested in Bitcoin, the other one doesn't care at all. So I think we're at that stage where it's like, it's not really the reality of Bitcoin's, explosion upwards has not hit the normies yet, but it's hit kind of the people that are sort of into investing.
If you look at even going to nation states, then okay, yeah, there are a couple of nation states that have expressed interest or expressly got into Bitcoin. But if you look at currency wars on the whole, what have we seen? Especially reports of particularly Russia and China doing. They're hoarding gold. They've been buying huge amounts of physical gold, and gold is still king in that regard. And so when we talk about where Bitcoin's market cap is going to go, gold is the obvious target is to flip gold. But of course, gold, you have to get over 5,000 years of institutional history with gold first. And that is a very difficult thing to do. So if we look at Bitcoin as going, what is it currently, is about a tenth of gold's market cap, roughly. A seventh,
not
eighth.
even that. Gold is 14 trillion almost, and Bitcoin is 800 billion. So it's
okay. So so less than that. So we're talking about 7% or so of gold's market cap. And so if we look about where can it go, definitely it can go there. So that's a 15x immediately off in today's sort of money. And if you look at gold, if you do value gold as money, well then gold is the benchmark, right? You want to gain relative to gold. It just so happens you could do that with Apple stock instead. So this is like, if it may be that Bitcoin gets that high, but if it's getting that high on the back of an exponential run, how sustainable would that be? Very likely that would be sustainable. So perhaps we see talks of the flippening. That Bitcoin gets there, it gets close, and then nope, it fails and it drops 60-70%, and gold looks at it and goes, okay,
you're
see
okay
you in a
down
few
there.
years. and it doesn't mean that Bitcoin has failed. It would just mean that there's just not enough money for it to deserve that market cap. And it's okay for things to take longer than we want them to.
I'd be surprised. Like the goal is, I mean, in terms of this particular discussion right now, is Bitcoin needs to get past gold and stay there. So during a Bitcoin bear market, Bitcoin needs to be worth more than gold in market cap. That's kind of the benchmark goal, I think. So that's going to take a while. I mean, maybe I'm wrong. Maybe it happens this cycle. But I doubt that. But
that's, you just have to look at where is the money going to come from to do that? Because if we talk about a collapse of the trust in fiat, and Bitcoin has an absolute explosion because of that, because I don't know, there's trillions of dollars of corporate and government debt default around the world. Well, if that happens and Bitcoin rallies off the back of it, what's gold going to do? Gold's going to rally off the back of it as well. And so by the time Bitcoin gets to a $10 trillion asset class and it looks, I'm close to gold, well, gold's already a $20-25 trillion asset class.
Precisely.
It doesn't necessarily, gold is going to be a moving target, and fundamentally, if we look at what's going to drive Bitcoin upwards, it's also going to drive gold upwards. You mentioned the gold ETF towards the start, and yes, that is an example of people, you can maybe say, people to look at gold's underperformance over the last decade. Well, of course it had an underperforming decade. Look at the previous decade. It went from a few hundred up towards $2,000. It had an absolutely ridiculous run. And so, yes, it crashed 50% because of it. So it did a Bitcoin. Now gold could do exactly the same thing again. It could have a run to $5,000 or $10,000 before it collapsed downwards.
Can I just end this stream with something to respond to what you just said there?
You can.
Last decade, gold went up, and then it had kind of a flat one.
Yeah.
Last decade, that was when the ETF was opened.
Yep.
It just went whoop.
Yeah, well, let's say that's it on the back of it. So the massive run was on the back of, this the ETF launched, and it's not just that. There was a commodities run. There was if we actually consider it, that was probably the best the economy has been in our lifetimes was during that period. It just so happened to have been built on a housing bubble, which then ruined the rest of our lives. So, yay.
Oh, it's so grotesque, but you're right. All right, well, cool. So I think we're done for today. I think we were aiming for 45 minutes. We're at 50. That's fine. It's all good and dandy. But if you like this content, guys, remember you've got to subscribe, like, leave the notification thingy to all or whatever it says on it, and join the Discord. Please just join the Discord. Like, we're there all the time, hanging out, talking. We have these discussions daily. We even discussed recently if we should just stream when we're doing our trades and all that kind of stuff, and just always be live streaming and talking and hanging out in the Discord. And if you guys would like us to see that, just tell us. Please tell us. Like, leave a comment if you want to see that, and we will think about it. But we'll see. So that's it for today, guys. We'll see you again soon. Maybe.
Probably.
All right. Have a good one. Like, subscribe, do all that stuff. See you. Cheers.
Bye, guys.